So, Laurens, we're going to talk about immigration, immigration from the US to Europe again.
Yeah.
Last episode about that. For now, what did we not discuss in the last episodes that we would like to discuss today?
Right, yeah, so there are still a few topics that we have not yet touched upon. Real estate, for example, gifts, inheritances, pension plans, all that you build up.
Healthcare plans also. So
exactly, yeah.
Yeah, and maybe what happens if you go back to the US?
Yeah.
Yeah. Okay. So let's start with real estate. What do we have to know about real estate if you have that abroad?
Yeah, what you have to know is that if you sell the real estate or if you get rental income, so basically if you get any income from that real estate, that it needs to be reported in the US. And that's also quite logical because you need to file your worldwide income in the US.
Yeah.
So also if you get any income from real estate, even if it's an apartment in Spain or Italy, then it needs to be reported. And sometimes people think that real estate abroad is, let's say, out of scope for the IRS because that's the misconception. It's because it's true that in the tax treaty the primary right of taxation is most of the times allocated to the country where the real estate is located.
Yeah. And it makes sense. If you have an apartment in Paris, then France may tax it or not.
Yes.
But that's the misconception because if you get rental income out of that apartment, for example, then you will still report that back in the US if you are a US citizen.
And in France in this example, so in both countries you report it and then the tax treaty decides where you're going to effectively pay those taxes.
Yeah.
And then most of the times what it will be in practice is that you subtract your foreign taxes paid from your US tax bill. So if those foreign taxes are higher than what you would have paid in the US, then you essentially pay zero in the US.
Yeah.
And if those foreign taxes are lower, then you also pay a part of it in the US as well. But it always needs to be reported. So selling a house or rental income, and then in the tax treaty, and let's say all tax treaties that I know, then the other country where the real estate is located has the primary right of taxing the rental income or the capital gain on real estate.
Yeah, but it can happen that you have to pay up to, let's say, the US rate if the local rate is lower. And if the local rate is higher, then it's going to be zero taxes in the US. If the local rate that you pay on, for example, rental income is lower, then you have to pay that difference up to the rate that you have in the US.
Yeah.
In summary. Okay. Gifts and inheritances. So let's say again you go from the US to Spain and you get, and of course if you get an inheritance from somebody in the US, then that will also be taxed there. But let's say you get an inheritance from somebody in Spain or Germany or a non-US person.
Yes. In that case it's typically exempt in the US. So if you receive a gift or inheritance from non-US persons. But if it's more than 100K, you still need to report it in the US.
That's 3520.
Exactly,
3520.
Yeah, exactly. So then it's like a reporting thing. So you still need to report it, and it could have side consequences like FBAR and FATCA reporting.
Yeah.
That you always need to keep in mind.
Yeah, of course. Yeah, and it's important to make the distinction. Reporting doesn't necessarily mean that you have to pay taxes. It only means that you have to report. And it could be that you also have to pay taxes, but that's not a given. And in this case, it will often not be the case if it's coming from a non-US person. Retirement accounts and pensions when you live in Europe.
Yeah, so those typically remain subject to US rules, even when you're abroad. So that's then taxed as ordinary income in the US. Yeah. And of course with pension
so 401k, things like that,
exactly,
that will be taxed and subject to the rules in the US and will be taxed in the US as ordinary income.
Exactly, and then of course in the country where you're living, it's most of the times also taxed. It depends on the tax treaty. You will most of the times find the outcome of these kind of questions in the tax treaty. Yeah. So if you go to France, it's probably going to be very US friendly in pension land.
Yeah, because of the tax treaty.
Because of the
between
tax
the US
treaty.
and France is very
Yeah, exactly. So most of the times then the pension income is exempt in France. It just pushes the other income into a higher tax bracket.
Yeah.
And in Portugal, for example, under the new rules in Portugal, then Portugal also wants to tax that pension income, and then you look at the tax treaty that determines, okay, in which country are you going to get a credit or an exemption. And
maybe good to mention here, we at Tytle, we can help you with this. We cannot discuss, let's say, all situations or all routes, because you can go from the US to Germany or to the Netherlands or to Portugal, Spain, and rules when it comes to pensions differ from route to route. So we cannot give a one-size-fits-all answer here.
In this video,
of
course.
This video.
And then, so if you register at Tytle, then we can do that, let's say, because we have advisors in all countries, so in the US and in European countries. And they're of course happy to have a look at the tax treaty and see how your
what applies,
how your income is taxed. So for planning and for filing.
So I think we're almost there. There are two more things left. So there is the Affordable Care Act in the US, and if you don't have minimum essential coverage, then you, in some states, I don't think that's the case anymore at the federal level, that you can get penalties for that, but at state level it still happens. So if you go abroad and you don't have minimum essential coverage, because maybe there are other items in your plan when you go abroad, what about those penalties? Will you get those penalties, or?
No, so if you actually live abroad, then you're exempt from the coverage under the Affordable Care Act, typically. So then you look again at the same tests that we looked at in one of the previous videos of FEIE. So you have the physical presence test.
And that's the foreign earned income exclusion. So if you qualify for that,
so
then you also qualify for an exemption for the minimum essential coverage.
Yeah, exactly. So it's the two tests that are used for the foreign earned income exclusion are the same test that you can, have a look at when you want to determine whether you actually live abroad or not. So whether that qualifies.
Maybe we should do
the physical presence test and the bona fide residence test.
I was just thinking about it. Maybe we should do another episode about physical presence test, bona fide resident test. Could be interesting, but we don't have time for that in this episode. But let's keep that in mind for another episode, perhaps. Last thing, if you become an repat, so you were an expat but you're going to repatriate to the US, so I think Affordable Care Act, that's just kicking in again.
Just resume, so you will have to be compliant again.
And reporting your US income, that will continue, of course, when you go back to the US. Would be strange if not. But maybe Social Security and Medicare taxes that were deferred while you were abroad. I think that's sometimes...
Yes, and sometimes you can have situations where you have to pay something back, for example, or when there needs to be something needs to be repaired, or something along those lines. All of that just resumes as normal again. There might be some other reporting obligations that you have as a U.S. citizen living in the U.S. compared to when living abroad. But you basically return to the situation before moving, so you need to make sure that you're compliant with everything again. And let's say if during your time abroad you had some foreign investments or other assets that you acquired,
real estate,
everything has to be reported, which most of the times has already been reported while you lived abroad. But it's just
obviously continues. So everything you acquired abroad will still be subject to those reporting requirements. Okay, I think that's it. There will be follow-up videos on specific subjects, but for now, this was it on emigrating from the US to Europe. And please let us know if you have questions, right?
Yeah.
Always important.